Peter, welcome back. It's another exciting week looking ahead at the data that will be the signals that will drive trading activities.
Well, good morning, Will. I think a couple of things that were really interesting. The Fed came out midweek and we had those talks as far as Jay Powell and taper cuts. We have seen, I think, probably two of the biggest days of trade, Thursday and Friday last week, absolutely monstrous. Gold's at $17.69, down $140 in the last matter of, I don't know, a week or so. You've got the next part, crude got hit, all the base metals hemorrhaged. US dollar went up from 90.2 to 90.3 to 92.4. Aussie dollar's under 75. Who would imagine that? We were talking to be at 80.
From serious highs only a matter of weeks ago.
Yeah, and Kiwi's been spanked, Euro's spanked, yen very hit, pound hit. So it's just been incredible. Nasdaq was down nearly 2%. So everyone that shorted the market went long dollar, king dollar. Just incredible money that's been made.
It's just having a quick look around at Asia, mate. The Nikkei, you spoke about that now. It's slid over interest rate concerns.
Over 3% there.
Gold steady after posting the biggest losses in over 15 months.
Oh man, it was absolutely spanked. 17.69. Who could have imagined it? With 19.10, everyone's thinking is it a $2,000 trade, and then all of a sudden $140 gets whacked off it.
Mate,
silver down as well.
Interesting, and copper. We'll talk about copper maybe a little bit later as well as nickel. But if we look at tech, I mean, what's really interesting here? If we say, hey, Morgan Stanley keeps talking crypto, why?
I think they've got to, because the reality of the matter is we've seen big run-ups, what you've seen in the last, say, 4 to 5 months as far as Bitcoin or since the start of the year, the uncertainty there, US dollar, all of these unknown events and unknown scenarios that are currently playing out and how that goes into the future. So where's dollar going to be? What happens to currencies? And where
what is the reserve currency of the world? I mean, US dollar's been
still US dollar
there very significantly since about 1945.
Yes,
I think it was a week or two ago that there was a big conference in Miami.
Yes,
and a bunch of Bitcoin enthusiasts got together and said, "Hey,
I saw that
how about that?" Well, El Salvador is now announcing a plan to go and actually put Bitcoin in alongside the US dollar as its fundamental currency of choice. Why? The answer, Pete, is because all of the people that actually send money home, and they're a bit overpaying the rates.
Well, there's the other side, of course, transfer costs and so on. I'm strapping myself in. I don't really comment too much on crypto. I'm still there just absorbing it all. I'm certainly not old school. I'm new school in my thinking, but I'm just looking at it all and seeing
what we're really talking about here is the impact of technology on the world. And here is another great example of how the technologists are saying, "Hey, can we do this better, please?"
Yeah, we didn't have internet 15 years ago in Africa, India. Have a look at China.
We didn't have internet 15 years ago in Australia, really. I mean, Telstra's only really stepped up its game.
Yeah, true. So it's just incredible where we are and what the future holds. Technology-driven and young economies like Africa and India, just breathtaking, absolutely breathtaking.
All right. Well, as you can see, it's either the Nikkei, gold, or crypto. And the only thing here we probably should draw out here, and we're talking. This is the Bloomberg front page this morning, and the Asia edition. A real estate mogul has a $100 million plan to save the internet, and I'd like to hear that, but we'll come back to that later.
Sure.
Righto, Pete. So
we're off and racing.
We're off and racing. We certainly are. US dollar and Treasury.
Have a look
talk
at
me
it,
through
Will.
this chart.
US dollar index, as it's seen there in the green. So there we are, and that was, that 89.5 nearly handle that we saw in May, and then all of a sudden, boom, we had that June FOMC meeting last week, and you can see what's happened. It's up, and it's now at 92.2, 92.3 this morning. So there's the storyline. There's your 10-year Treasury yield, and we saw that number to the left of the screen in blue and how it's just ratcheted all the way up, what the long end of the curve's going to be, and of course, where we are in 2023, Jerome Powell last week saying we're going to see 2 interest rate rises. There's many of the Fed's officials on that 18 panel of 18 people, and they're saying it may happen in 2022. So what happens here as far as real estate? We need to do some other, there's so much to talk about.
More to talk about.
Yeah, too much subject matter.
Looking here now, Bank of England bond purchase, look like they're slowing. Super Thursday's not going to happen. I think it's going to be a taper. What do you think?
Yeah, I think there'll be taper talks, and what we're happening as far as where the storyline goes as far as interest rates in the UK. Is that the next part of the whole cycle that US has shown their hand? Taper cuts, Germany, and there was something here I wanted to just show you. Page, page 3 of the Financial Times over the weekend. Germany's central bank head urges end to ECB bond buying. So I think that they'll probably play the same way. Bank of England, you'll see interest rates start to ratchet up. It'll all be across the globe. It'll be a global, I'm not saying a stampede, but that global trend. They've got to contain inflation, man. Paul Tudor Jones came out, and just the other day, he was a hedge fund king, and not only that, he was the prince of the pit. I remember seeing something in '84, and he was the prince of the pit in Chicago. Really a dynamic cotton trader, born and raised in, he's a futures trader. I think his family were as well. And this guy's saying inflation is where they need to look at. That's the smart money going forward.
Eurozone PMIs, let's take a quick dig in here. Manufacturing, clearly a dip.
Manufacturing has been a very, very strong move. We saw that, and it's taking the other two indices up with it, or services and the composite. So I feel that it's all onward and upward, and I wouldn't be surprised that the three of them are above 60 going sometime in August over this European summer.
All right, rounding out this morning, we're going to dive in here for 30 seconds on copper. Copper, what a trade.
Copper. I spoke on CNBC the other day, and the copper trade is interesting. First point is, those stockpiles coming out of China. China said they want to really release those strategic supplies or stockpiles into the market. So they've got that, they bought very cheaply. First time they've actioned that in the copper market since '05. They did 10. They did aluminium and zinc, I think. You might remember back, I think, in the last 2 decades when they released that pork strategically for SARS, because they've got large stockpiles of pork because that's the main staple, along with rice for their current country as far as protein intake. So they released that, and what we've seen is that copper got hit twice. It got hit by US dollar index, boom, king dollar, and it got hit by the strategic release of those supplies. And look where it is. We were running copper nearly at $11,000 a metric ton only in the last month, and now we're at 9,000.
Run me through 30 seconds. Where to from here?
Keep an eye on gold. Watch what's happening as far as US dollar over the next couple of days. Wear equities. They'll fall, but they'll bounce. So I think there's still, there's some good dollars to be made, and watch what's happening as far as the currencies, of course, and then your base metals like copper.
Ladies and gentlemen, that's the weekly wrap from Peter McGuire. Well done, sir. Look forward to seeing you next week.
Thank you, Will. Take care.